In this video, we will be diving into what a down payment is. Do you need 20%? And what are the best options for you, kind of looking at different loan programs and things of that nature. Let's dive right into it. My name is William Singh. I'm a local real estate agent here in Portland, Oregon, and we'll be diving into this content about what a down payment is. If you find any of this content helpful, it would be great if you could press down on that like and subscribe button. It would be helpful and I would greatly appreciate it. Now, what is a down payment? A down payment is a sum of money that a buyer pays in the early stages of purchasing an expensive good or service. Now, in this case, we are looking to pay for the home, and this is something that you do prior to closing on the home and is an upfront payment. Within the last 5 years, 65% of people who have bought a home have gotten assistance from family or friends, and it's something where some of the major limiting factors is going to be the rising rents, which is about 22%, and then limited income, which is about 32%. Now, this is something that may change in the future, it may not, and it also just kind of depends on the variability of the economy. So just something to kind of keep in mind that it is hard to build up down payments. And if you have any need for tips or suggestions, feel free to reach out to me and I can send you a longer list of things that can help you out when looking at building up that down payment. Now, something to keep in mind is that not a lot of people are actually doing 20% down on homes. Within the last 30 years, the typical median down payment was about 6%. So about 14% than you would have thought. Now, we'll be diving into some loan programs that I'll kind of describe a little bit more about what their down payment system is. And you can always dive into a little bit more of what those loan types will be. I do have another video that I'll make sure to link down below that will kind of go over the different loan types. So just to have a better idea of what these down payments would be, I'll be going over some quick ideas of what the down payments are for these certain loan types. So number one is going to be the VA and USDA loan. This is at 0% and is one of those things that only is for those who qualify. One other thing you can add in here is the physician loan as well. The next one is going to be the FHA loan. This is at 3.5%. You can always do more than 3.5% and is commonly known as the first-time home buyer loan. And the next one is going to be the conventional loan. You can go down as low as 3% and also go up to 20+% if you're doing this type of loan. Just know that when you're going to that 20%, the whole point of that is to remove the mortgage insurance. And that's why a lot of people believe you have to get 20%, but you can still put down less than 20%. Now, the last one is more for investors. If you're looking to buy an investment property where you are not living in said property, then those investment loans are typically 25% or more. So just something to kind of understand. So now that we've gone over the different types of down payments and the kind of ranges you might be able to see, some things to really consider is that when it comes to down payments, just how much do you really need to bring to the table? This is a great conversation to be having with your lender. The reason being is that they can kind of go over the numbers and say, hey, if it's better for you to maybe be putting down 5% because you'll have extra money in the bank and it makes you feel a lot better, instead of putting the full 10% down, and you then have very little in your bank account. So just something to kind of keep in mind, that it's a good idea to be talking with professionals to kind of help you with that. And if you need any connections whatsoever, feel free to reach out and I'd be more than happy to connect you with someone local or even across the nation. So with that, one of the major things to also know is another statistics from the National Association of Realtors is within the last 6 months, 43% of home buyers actually were able to save up their down payment within about 6 months.
Wow, that was fast.
Now, remember that statistic about the gift funds and them coming from family and friends as well. So just something to kind of keep in mind, that you can do this in a shorter period of time, but you can also do this at a longer time frame as well, whatever works best for you. Let's compare buying a home with 5% versus 20%. Now, this is one of those things where an important equation to know is the purchase price minus the down payment equals the loan value. This loan value is something that will definitely affect the amount that your monthly mortgage payment will be. Let's dive into this first scenario where let's say that the median home in Portland is about 600,000. So if you're doing a 5% down on that, that means you're going to have a 30 grand down payment. And at a 5.25% interest rate, you're looking at around $3,147.66. So something where the mortgage payment is much higher, and also know that you might have maybe $300 to $500 in mortgage insurance. So if we're going a little bit more conservatively, we're looking at a $3,647.66 amount for the monthly mortgage payment. This does not include the taxes or insurance. So just something to kind of keep in mind. Now, if we're looking at that 20%, again, very similar, 600,000. The difference is that we're going to have $120,000 for a down payment at 5.25%. Now, this drastically decreases the mortgage payment down to $2,650. And is one of those things where, yes, it may look cheaper upfront, and it might be cheaper upfront, but it doesn't always account for appreciation. Now, determining how much you want to save for down payments and kind of determining other factors is something that I would still highly recommend talking to a lender to. You can also talk to an agent to at least get a ballpark figure of where things are at as well. And it's one of those things that is highly dependent on you and what your risk profile is, what you're wanting to do, things of that nature. And just know that there are other factors that play into this, such as credit score, and basically it'll increase the mortgage insurance if you have a lower credit score. So these are all things that you should be keeping in mind when you are looking at how much of a down payment you are wanting to put down. It is a personal finance thing. So with that, I would love it if you left any comments down below if you had any success with lower down payment programs, and especially in a shifting market, that is something where they become more and more possible, and especially in a buyer's market where sellers will kind of get what they get. With that, if you found any of this content helpful, it would be wonderful if you could tap that like button, and if you can also subscribe if you like this content. Thank you so much for watching.